to the Entrepreneurial CPA Show, special COVID-19 editions. We're here to talk about everything audit and attest related to help you break through the box and punch above your weight. And once again, we're bringing in the experts because frankly, it's not me if you want to hear about audit and attest world. So we bring it in once again, Melisa Galasso from Galasso Learning Solutions. Melissa, you're back from North Carolina. And last time we talked about all of these delays, which are just frankly just overwhelming. Today, I think it'd be really important if we can touch base on, you're doing an audit today, what's some considerations to think about during COVID-19? So once again, so firms are ready to deal with this up front instead of getting caught on the back end, especially on peer review.
Absolutely. So from a financial reporting side, there's actually a lot of things to consider. Obviously, when this first started breaking in March, we started to see even public companies having disclosures in terms of going concern, in terms of subsequent events. So if you think about this, for a lot of entities, this happened subsequent to their 2019 financial statements, right? So typically that would be a type 2 subsequent event. We disclose it, but we don't have to change our financial statements for it. However, if you have a 331 or you have a 630 year end, COVID was very much out there during your fiscal year. And so it's not a type 2 event. So you actually have to consider how that's going to impact other information that you have to think about. So when you think about asset impairment or loss contingencies, risks and uncertainties, right, there's going to have to be consideration in the financial statements about how this is going to look. And then obviously FASB and GASB both request that there is disclosures regarding if you're considering if there are conditions or events that raise substantial doubt. So we're seeing the impact of this on financial reporting now. So originally really focused on the disclosures, but now we're seeing that we're actually seeing restatements and not necessarily restating prior information, but changing how we're evaluating things on the financial statements due to COVID-19.
And that's very interesting. Once again, something for us to think about on the audit side. What are some of those hot button things they need to be thinking about? Because there's probably some reoccurring things they're seeing across the board.
You're going to probably have, if you're the auditor, you're probably going to have some emphasis of matter paragraphs to consider, right? So draw attention to those disclosures. Hey, by the way, you know, this entity is being impacted by them. If you're the auditor, you might want to think about auditing estimates, right? So if you think about it, the impacts and the inputs might totally have changed, right? You might have had a great projection and now your industry is closed down and you're not allowed to serve. You're not an essential business, right? How does that impact you? How does that impact your cash flow? How does that impact your ability to continue as a going concern? So on the financial reporting side, we have to think about it from a disclosures perspective. And then from the audit side, we have to say, well, is management biased? Is management really rosy in that we're going to come back from this and everything, the economy is going to bounce back? Or are they really taking this from an objective point of view? And it's hard to be objective about your business, right? Your business is your baby and everyone expects to come back. And obviously with the PPP loans, we don't know how to account for them. We don't know if it's debt and it's forgiveness. We don't know if it's a contribution. We don't know. We're waiting to hear more. So there have been a lot of requests of OMB. Is this going to be subject to uniform guidance? If I'm a nonprofit and I'm receiving this, is this going to be subject to testing? Is this going to put me over the limit to have a single audit, which is an entire audit on top of your financial statement audit? So there are actually nonprofits who haven't applied for the PPP loan because they're afraid if they receive it, it will put them over the limit to get a single audit. So there's a lot to be thinking about in terms of the accounting and the financial reporting, but also the audit side.
And that's interesting because, you know, in New York State for nonprofits, even before the single audit, on different revenue thresholds, you have to review in an audit. Mm-hmm. And yeah, I can see that. Let's say you get the PPP loan for $500,000. Yep. A certain amount isn't forgiven. That could put you over that threshold. Now, will New York State give you a waiver to get out of that because it's such a one-time thing?
And that's what we don't know. The GAQC, the Government Audit Quality Center for the AICPA, submitted like a 6-page letter to the federal government saying, tell us what this is going to turn out. We don't know if it's going to be subject to audit. We don't know what the right accounting is going to be. We have some information about, is it a troubled debt restructuring, right? FASB came out and said, if you're extending someone's payment terms simply because of COVID, then it's not likely to be troubled debt restructuring. However, if this lasts a long time, we might be looking at more TDRs, and that accounting is not unexciting by any stretch of the imagination. So the accounting is changing, our considerations are changing, our inputs are changing, and we can't just assume that the audit or the financial reporting is going to be business as usual. You really are going to have to do some thought process as to how we're going to get this done. And that, if we have a normal close process, I don't think close is going to ever look the same again.
No. So with that, have you seen firms do anything to put in a kind of a standard emphasis of matter paragraph or going concern or estimate paragraph that addresses like just kind of COVID in a nutshell?
Absolutely. Any public company right now is going to have an emphasis paragraph. They don't call it that. They call it an explanatory paragraph, a PCOB. But they're going to have an emphasis paragraph by the auditor. And if you look, the retailers in particular have some really awesome examples of COVID disclosure. So if you are in a particular industry and you're not sure what to write, go look at a larger public competitor. If you're in retail or if you're in the restaurant business, if they're filing their financial statements right now, they have to have these out there. The SEC has been pretty clear that you need to give good disclosures about this impact. And they even presented, it's like a few-page checklist on things to consider when you're providing that disclosure. Now, that's only for SEC companies, but it's not a bad idea for private entities to take a look at that just to kind of take a step back and say, okay, well, I should consider this as well for my disclosures. And I haven't seen an audit firm that hasn't had an EOM paragraph yet. I mean, everyone has a COVID implication. But also subsequent event, if they're receiving these PPP loans and things like that, that can also be disclosed as well.
I'm sure, especially if they get a big SBA emergency disaster loan. If they get $1 million, that can be a big deal. If they get $2,000, it probably is not material to put in there.
Correct. So it just really depends on what they're getting and what they're applying for and what they're eligible for.
Interesting. So final question on this. From hearing all this and thinking back to my auditing days, it sounds like when it comes to going concern, we're going to follow the same process before we evaluate the going concern just based on what's going on today.
Yep. So remember, SAS 134 is going to make it clear in the audit report, but SAS 132 really changed how we think about going concern. 132 basically says management's responsible for evaluating going concern. The auditor's job is to evaluate management's evaluation. And so it's their responsibility to do the initial evaluation, but we have to determine whether management has bias or whether management's plans are operable. And then we ultimately make the conclusion on whether there is substantial doubt about that entity's ability to continue as a going concern.
Awesome. Very important to think about. And I'll tie in a topic along those lines from what our other guest host that mentioned, if your clients say they're going to go bankrupt or you have a going concern issue, it's a great time to let your insurance provider, probably Cameco, pre-report that and let them say, hey, just so you know, here's the issue, here's what's going on. Get it documented so you're as best covered as possible, because there's going to be a lot of businesses that go out of business as a result of this, and you don't want them turning their sights on you and your CPA firm.
Absolutely. Great advice.
So Melisa, thank you for this round 2. I think we'll come back for one more round 3 and pick your brain on some auditing considerations for people that are still doing audits today.
Absolutely. Thank you for having me.
All right, everybody. Thank you as always for listening. If you got questions, I'll put a link below to Melisa's website. She's got way more in-depth knowledge on all these areas. She's got a great blog that you should subscribe to. Also, speaking of subscribing, click to subscribe to the YouTube channel. Stay up to date. And we challenge you today, take action to change this world and continue to invest in yourself.